I'm going to tell you about a mistake that has caused millions of traders to lose profits like sand through their fingers. Yes, that mistake is ignoring the RSI. Look, when I was learning to trade, I too used to think that indicators were just colored lines on a chart. But when I suffered some of my biggest losses, I realized that these lines were the language the market was speaking to me, and I wasn't listening. RSI, or Relative Strength Index, is the voice that tells you when the market has bottomed out, when greed has crossed its limits, and when fear has become so great that a turning point is about to occur. But what most people do is look at the price, the hype, and listen to others, but don't listen to the RSI. And then, when a reversal occurs, they say the market is being manipulated. No, it wasn't the market that was being manipulated, we were the ones who were blind, I learned. Understanding RSI means peering into the mind of the market. And today I'm going to teach you what I've learned from years of experience, how ignoring RSI can sweeten your profits, and how understanding RSI can turn your trades into accurate decision-making machines. So, if you want to understand when the market says enough is enough, don't miss a second of this video, because I'm about to start with the key that could change your every next trade. Let's start with the biggest mistake, ignoring the RSI. When I first started trading, I thought it was the key to understanding the market. That day, I started looking at trading from a completely new perspective, the RSI, or Relative Strength Index. The name may sound technical, but its truth is profound. It's not just a number, it's the market's heartbeat. When a stock continues to rise, the RSI tends to rise. But when buying energy begins to wane, the RSI indicates that the crowd is becoming overconfident, and that's where the downtrend begins. This is where most traders lose their profits because they ignore the RSI's warning. I learned too late that the market always operates on two things, greed and fear, and the RSI measures both. When the RSI rises above 70, it means greed has set in. Everyone wants to buy, and no one considers a possible correction. And when the RSI falls below 30, people sell out of fear. But that's where the true opportunities lie. When everyone else is selling, I stay calm and listen to the RSI. I once invested in a company. Everything looked perfect on the charts, volume was increasing, and the price was making new highs every day. But the RSI had reached 78. I was also greedy, so I decided to wait a little longer. But within a few days, the same stock started falling, and my profits slowly evaporated. That day, I realized that the market never falls straight away. The RSI declines first. The RSI doesn't tell you what to buy or sell. It only tells you how much the market is currently swayed. Once I understood this, I started looking at the RSI before every trade. I began to realize that this wasn't just a line on a chart, but a conversation the market was having with me. I would look at price action and then observe the RSI. If the RSI and price weren't moving in tandem, I knew something was wrong. The market is showing an uptrend, but the RSI is going down. This means the smart money has left and the crowd is now playing. These are the biggest traps. The RSI has taught me patience. I used to jump at every movement, but now I can observe whether the market is genuinely strong or just riding on temporary hype. The RSI gives me insights that the naked eye can't see. It tells you when the crowd's energy is waning and when a new wave is about to emerge. The most important thing to win in trading is mindset, not data. And the RSI helps you develop this mindset. It teaches you when to pause and when to move. Sometimes the RSI goes above 70, but the price continues to move higher. That's where I ask myself, is this genuine momentum or just the last hurrah of the crowd? Every time I ignored the RSI, I lost money, and when I listened to it, I found stability. I learned that success in the markets comes to those who know how to listen, and the RSI teaches that art of listening. Sometimes a simple indicator can redefine your entire trading career. The RSI became the tool for me. Even today, I analyze any chart only after I've read the language of the RSI. Because I know that if I ignore it, even if I have profits in my hands, they won't be. Profits always come to those who understand the tone of the market, and the RSI is the most accurate reflection of that tone. When I began to understand the true depth of the RSI, I realized that it's not just a technical indicator, but a mirror of market psychology. Behind every candle, every movement, lies human emotion, fear, greed, hope, and regret. The RSI is the mathematical representation of those emotions. Those who only look at the numbers can never understand the RSI. But those who learn to read the mood of the crowd use the RSI as their most honest companion. The RSI measures two things, momentum and emotion. It indicates how fast a price movement is, and emotion indicates how excited or fearful the market is about that movement. When I look at a stock's RSI, I don't think about whether it's 70 or 30. I consider the current market sentiment. If the RSI is rising, it means buyers' confidence is increasing. But when the RSI rises too high and then flattens, it means that confidence is now shifting to bears. And this is where the root of the downturn begins. In my early days of trading, I made the mistake of considering the RSI a signal machine. As soon as the RSI went above 70, I would sell. As soon as it went below 30, I would buy. But gradually, I realized that the RSI's function isn't just to indicate levels, but to show energy, the internal energy of the market. Sometimes the RSI remains above 70, and the price continues to rise because the energy is genuinely strong. At other times, the RSI stops at 65, and the price falls because the crowd's energy has dissipated. Understanding this difference is true trading maturity. When I analyze a stock, I don't view the RSI as just a tool. I consider it a conversation partner. I ask, is the market stagnant or ready? The RSI gives me the answer. If it shows that buyers are pushing hard, but momentum is gradually waning, I understand that smart money is slowly leaving. And when the RSI slowly starts to rise from its lows, while the price is still in fear, I know the crowd is selling, but an opportunity is emerging. I remember once seeing a stock whose RSI was at 28. The entire market was in panic, everyone was selling. But I noticed that the RSI was slowly rising, even though the price was still falling. This meant the crowd was fearful. It doesn't just show numbers, it gives a sense of the crowd's determination and expectations. The RSI doesn't tell us what the market will do tomorrow, but it does tell us what direction the crowd is thinking today. And this is the most valuable asset in trading, understanding crowd psychology. I learned that if I read the crowd's thinking early, I can stay one step ahead of it. The RSI gave me that edge. Every trader should learn this from the RSI, that behind every market move there is an emotion, and the RSI expresses it in numbers. Only those who understand these emotions see opportunity in every downturn and danger in every upswing. The RSI gave me this vision, a vision that doesn't show charts, but definitely signals. It gives, when I look at any stock, then first of all I do not think about where its price will go, I think about what is the sentiment of the crowd right now, whether people are greedy or afraid, because these sentiments are clearly visible to me through RSI. All the big losses I have seen in my life always happened when I ignored that warning bell of RSI. When the market was in excitement, I too got carried away in that crowd. RSI was shouting that it is now overbought, but I could not hear that voice in that noise, and in a few days that excitement turned into a fall, and my profit vanished. The most difficult thing in trading is not understanding the signal, but believing in that signal. The RSI signals early that the momentum of the crowd is weakening, but our inner greed prevents us from believing it. We think, oh, it'll go a little higher, and that's where we miss it. I realized this deeply when I once looked at a chart showing a stock steadily rising, with the RSI close to it. Everyone was saying that this is a rocket. I also took a trade in that hype, but in a few days that stock fell by 15%, and I learned that there is a root of danger in every rise, only RSI shows it first. The biggest wonder of RSI is that it prevents you from following the crowd. When the market is going up, every trader is worried that he might miss the opportunity, fear of missing out, i.e. FOMO. And when the market falls, he is worried that he might lose everything, but RSI teaches balance between these two extreme emotions. When I see RSI on any chart, I ask myself, is this move sustainable? If RSI is showing that the momentum is slackening, then I slowly start exiting, even if the price goes up a little more, because I have learned that the winner in the market is not the one who enters every time, but the one who exits at the right time. Understanding RSI, I noticed one more thing. Often traders get happy just by looking at the price. They think a profit means the decision was right, but sometimes profit is simply luck, not a decision. The RSI teaches you this difference. If your trade is profitable but the RSI is giving a warning, understand that the profit is not sustainable. I analyzed many of my past trades and found that where the RSI was in my favor, profits remained steady. Where the RSI diverged, profits vanished in an instant. The magic of the RSI is that it keeps you ahead of the curve. When the crowd is blinded by emotions, the RSI coolly tells you the truth. And this coolness, this awareness, is the greatest strength in trading. I found that market losers aren't those who lack knowledge, but those who ignore warnings even when they see them. The RSI constantly warns you, telling you to stop. The crowd is done, And if you listen to that voice, your profits not only increase but also last. Every trader should understand that the RSI isn't a magic formula, but a truth meter. It tells you the truth every time, whether you like it or not. That's what I did. I accepted the truth of the RSI, and from that day on, my trading wasn't just about numbers, it became a conversation between the market and me, where the RSI was the translator who spoke the true language of the crowd to me. When I prepare for any trade, I don't just look at it from the chart or a single indicator. I always try to understand what the crowd is thinking and what the smart money is doing. The RSI has become my most reliable way to read the mind of the crowd. I've learned that if you want to understand the psychology of the market, the RSI is your truest teacher. When I look at the RSI before entering a stock, I don't just look at whether it's below 30 or above 70. I look at its behavior. Is the RSI recovering gradually or taking a sudden jump? Are the price and RSI moving together? Or are they on different paths? These small signals indicate how genuine the market's internal strength is. If the RSI moves slowly upwards and the price remains stable, I understand that the move is healthy. But if the price is rising rapidly and the RSI flattens out from too high, I become alert because this is where the crowd's enthusiasm outweighs the reality. I've always treated trading as an art, and the RSI is a brushstroke of that art. I've realized that the RSI doesn't just indicate overbought or oversold, it also reflects the market's tempo. Every market phase has a rhythm, and the RSI measures it. When the rhythm is fast, the market is full of energy. But as the RSI rises, that rhythm begins to break. And those who hear this subtle change exit before the reversal. For me, the RSI is not just an entry tool, but also a guide for exit. I never blindly trust a trend. If the RSI shows weak momentum, I gradually reduce my position. People often give up on profits due to greed, but the RSI often warns them in advance, but they ignore it. I learned that a profit isn't a profit until it's booked. The RSI tells me when that moment has arrived. Once upon a time, I was very confident in a trade. The company was strong, the market sentiment was positive, the price was going up every day, and I was happy that my decision was correct. But the RSI was constantly showing divergence, the price was going up, but the RSI was going down. I ignored it at first, but a nagging feeling of unease lingered inside. 2 days later, the same stock began falling, wiping out all my profits. That decline taught me to never underestimate the RSI. It's the quietest line on the chart, but its warnings are the sharpest. The true magic of the RSI is revealed when you learn to respect it. Now, I treat it like a friend before every trade. It tells me how excited the crowd is and when I should stop myself. I've learned that mastering trapping doesn't mean making the right entry every time, but rather recognizing the wrong entry quickly. RSI teaches those skills, patience, and a precise understanding of timing. Today, when I look at any setup in the market, I first observe the RSI, then the other indicators. Because the RSI tells me what the others don't, it reveals the market's internal breathing, the underlying panic or greed that isn't visible from the chart. I've learned from experience that understanding the RSI means delving into the market, and for those who learn to delve into it, every external movement becomes mere confirmation. I've always believed that the real game of trading is played in the mind, not on the charts. The RSI taught me that winning in the market requires more than just strategy, but also self-control. Previously, I was in a hurry to buy every DP and chase every breakout, but the RSI taught me to wait. I realized that the market doesn't always require action. Sometimes the best action is to do nothing. When the RSI is at extreme levels, it indicates the extent of market stagnation or euphoria. And if you can stay calm during those times, you'll be ahead of the crowd. I remember one time when the market was steadily rising, and everyone was saying the rally was unstoppable. The RSI had gone above 80. I was tempted, but I remembered my rule: whenever the crowd gets too excited, I stay in the back. I didn't enter at that time, I just kept observing. Within a few days, the market fell sharply, and the same people who were excited began to panic. It was then that I realized that the RSI isn't just a number. It's a mirror of the crowd's emotions. It shows when greed is at its peak and when fear is at its maximum. I learned another nuance about RSI, the power of divergence. When price is making new highs, but RSI isn't. That's the market's subtlest warning signal. I've often seen smart money quietly exit at such moments. By the time the crowd catches on, it's too late. That's why I use the RSI not just for signals, but to listen to the market's heartbeat, so I can be confident that the market is genuinely moving in my direction. And if there's a conflict between the two, I wait. I've learned that patience is the greatest strength. In the market, it's not the person who makes the most trades who makes the right trades at the right time who makes the most money. The RSI also taught me that not every correction is bad. Sometimes the RSI drops from 70 to around 50, then stabilizes and moves higher. This is a healthy pullback. Those who panic and exit make the same mistake where a smart trader prepares for entry. I've personally encountered many such opportunities where the RSI gave me perfect re-entries, neither too early nor too late. I was also taught that the RSI shouldn't be viewed in isolation. Real clarity emerged when I began to combine RSI with price action and volume. If price is near support, volume is increasing, and RSI is breaking out of the oversold zone, it signals that buyers are returning. Entry reward risk ratio is optimal at that time. Gradually, the RSI became not just a technical tool for me, but a decision-making partner. It teaches me discipline, prevents overconfidence, and curbs greed. Everything in the market is uncertain, but the RSI gives me a calming signal of what the crowd is saying, and I found that those who learn to read the crowd learn to thrive in the market. When I truly began to understand the market, I realized that the real secret to successful trading lies not in some magical indicator, but in discipline and observation. The RSI became a compass for me, but I never followed it blindly. I always looked at what the RSI was saying, but also whether the market was confirming it. Many times, the RSI showed me to be overbought, but the price was steadily rising. If I had shorted based solely on the RSI, I would have suffered a certain loss. Then I realized that every signal in the market must be interpreted in context. RSI tells you the emotion, but price tells you the truth. I noticed one thing: when the RSI goes above 70, most people take it as a sell signal, but I started to consider it a symbol of strength. Because when the RSI consistently stays in the upper range, it means that buyers are still in command. I've caught many strong trends where the RSI rose above 70 and sustained into 80 or even the pennant. Those who excited just by looking at the indicator missed the biggest rally. I learned that the RSI should be viewed not as a limit but as a reflection of momentum. The RSI's behavior in each market phase reveals something different. When the market is moving sideways, the RSI's oscillations are very useful. However, when the market is trending, the same RSI behaves differently. If I didn't understand this difference, I would repeatedly take the wrong entry. That's why I use it for myself. This means that if the market trend is strong and the RSI is high, I interpret that as strength, not weakness. I created a powerful system by combining RSI with price corrections. When the RSI dips but the price doesn't break major support, it's confirmation to me that this is simply profit booking, not a reversal. Entering at such times has been the most profitable for me, as the crowd is selling out of fear, while I calmly accumulate. Sometimes the RSI gives me advance warnings when the price is making a new high but the RSI is making a lower high. This is a subtle signal that the market is weakening internally. I've learned to take such signals very seriously because this is the moment when smart money quietly starts to exit, and by the time retail traders realize this, the price has already fallen. I always say, the RSI tells you the market mood, but understanding that mood requires patience. I studied the RSI like a meditator, observing every move. Those aren't just numbers, they're a reflection of human psychology. When greed increases, the RSI goes up. When fear spreads, the RSI falls. And only those who decode this psychology can make consistent profits. Even today, when I open a chart, the first thing I look at is the RSI. Not to give me an entry, but to tell me what the market is thinking. Because winning in the market means being able to think ahead of the crowd. An RSI, when understood correctly, gives you the ability to see ahead of the crowd. The biggest lesson I learned in my trading career is that earning a profit isn't difficult, preserving and sustaining it is the most difficult task. The RSI is a warning that investors are overconfident, and when they ignore it, those profits are wiped out in an instant. I learned that winning in the markets means trading with discipline and awareness, not relying solely on luck. I always consider the RSI to be the internal voice of the market. When the crowd is greedy, the RSI shows a rise. When fear is spreading, the RSI falls. I don't ignore these signals. I realized that the biggest mistake I made in trading was the same one I used to make, overthinking or ignoring signals. The RSI taught me that simplicity and observation are the most powerful tools. I once traded a strongly trending stock. The price was consistently making new highs, and the RSI was near 75. The crowd was excited, and the news was positive. Many were saying the rocket would lift off any minute. But I noticed a subtle divergence in the RSI. The price was making a new high, while the RSI was making a slightly lower high. I followed my instincts and gradually reduced my position. Over the next 2 days, the same stock fell sharply. That day, I learned that RSI isn't just numbers, but a silent warning from the crowd. If I ignored it, all my profits would disappear. I made RSI my most trusted trading partner. It teaches me patience, discipline, and prevents overconfidence. No pattern in the market is permanent. Profits are sustained only by those who understand the signals and read the psychology of the crowd. RSI provides this capability. It tells you when the crowd is ready, when it's gone, and when an opportunity presents itself. Even today, when I analyze trades, the first thing I look at is RSI. I ask him if the market is strong or weak right now, and he responds in silence. I've learned that the master of trading is the one who can decode signals, who can stay one step ahead of the crowd. The RSI became the tool for me, a profit guard, an emotion mirror, and most importantly, a protector of my trades. The market will always be unpredictable, but the RSI gave me the confidence that if I understand its language, profits can not only be made but also sustained. And this is the biggest lesson: never ignore the RSI, because ignoring it can lead to losing profits.